Hello, everybody, and welcome back to Keeping Your Business on Track. Today, I'm here with Lindsay Clark from our marketing and sales department. How you doing, Lindsay?
Doing pretty good. Thanks, Joe. How are you?
I'm pretty awesome. It's another day, right? So look, Lindsay, you had a question for me earlier, and let's just get right into it.
I did. So I've been seeing a lot of loan officers out there. I don't know if it's advertising or marketing that they have a 1% down conventional loan product. And at first I was like, okay, this sounds great, but is it good? Is it bad? I don't know enough about it. So what are your thoughts on it?
That's a great question. So I've seen this too. It's a 1% down payment. So it allows a borrower to get into a home with a lower down payment. So from the outset, that's great because, the home ownership is one of the biggest determinants of wealth in this country. So to get more people to buy homes that have lower down and get rid of that barrier of down payment, that sounds like a great thing, doesn't it?
It does. 1% down for sure.
There's a problem though.
Oh gosh, what is it?
There's one catch.
There's always a catch. It's too good to be true.
So this requires the borrower to be at 80% of the area median income to qualify.
Okay. 80% of the area median income?
Listen, I know that there's a lot there. So instead of me telling you about this, let me show you.
I like that.
Let's go to the whiteboard.
All right.
All right, Lindsay. So as promised, we're going to take a look at the actual numbers here. So the loan says that you can go up to 80% of the area median income, and it's actually specific to the property address. So let's pretend for this purpose that the home being bought is in Melbourne, Florida, zip code 32901, and I picked a specific address. I'm not going to give you that address, but I picked a specific address. And by the way, we'll put the AMI lookup tool per Fannie Mae down below. And so the area median income for this area, the 32901, is $89,600. You're like, okay, that's a decent amount of income, right? Well, it's 80% of that. So then it makes your income limitation at $71,680. Okay, so that's a year. So if I break that down to a month, that's $5,973 a month. $5,973 a month. Now, the Fannie Mae says, without a lot of problems, as long as the person qualifies, I can go up to 45% debt to income ratio. That means all of my monthly outstanding debt obligations, including my new payment for the mortgage, cannot exceed 45% of your actual gross monthly income. So that number is $2,687. So my payment, including all my monthly debt obligations, can only add up to $2,687. Now, for this sake, let's just pretend this person doesn't have a lot of debt. They have minimal credit card payments, we'll say $150 a month of credit card payments, minimum payments, and they have car payments that total $550. That's actually below, both of those are actually below the standards, or I should say the medians for most clients out there. But let's just say that's the case, because I'd rather go conservative than go, very aggressive. So that means that a new payment, so if I take this, I subtract out these, because this is the total monthly payment, the total monthly debt amount that I can have in order to qualify. So if I subtract all these out, that means my monthly payment on my mortgage cannot exceed $1,987. So if I look at that, if I look at a new home purchase, let's just say it's $220,000. That purchase breaks down like this. Let's pretend that people have good credit. And so you have principal and interest payment, you have taxes, insurance, mortgage insurance, as long as they're not in an HOA. So that would give me a total payment. Let's just pretend the purchase is $220,000. Now, the loan itself on this 1% down is actually 3% down payment, but the lender will give you 2% match, and you have to bring the 1%. So that down payment, that loan amount is around $214,700. All right. Out of that, let's say the principal and interest payment is about $1,384. Let's say homeowners insurance is about $200 a month. Property taxes are about $250 a month, and your mortgage insurance is about $126 a month. That totals up to $1,980. So in this scenario, the borrower can buy a home with that 1% out of their pocket, 3% total down payment of about $1,987 will get you about a $220,000 house. The problem with that here is that the average home in Brevard County costs more than that. So if the borrower, if you can find a house for that around that payment, then this might be a great deal for you. Now, I also figured in interest rates, where the interest rates about are where they are now. If those rise or fall, that can affect the qualification as well.
Wow, Joe, that's amazing. Honestly, I didn't realize until I looked at the numbers, and it seems like you don't really get as much house as I thought it would get you at 1% down.
You know, it's a great product. You know, if you can find a house that's in that price range, it's a great product because it does allow people to get in with a lower, initial investment.
Right, and the down payment is the biggest barrier to entry for many people. So again, it's a great product, but
For me, this seems like a marketing ploy for a loan officer who should probably be selling their value and how they can help. But, you know, if that loan officer is sincere and they're trying to help people get into homes and there's homes available for those people, then yeah, it is a good thing. But the reality is that the median price of a home in Brevard County is well higher than this will get you.
Yeah, sounds like a good marketing tactic.
It's a marketing tactic.
When you put the numbers to it.
Right. So, you know, out there, there's still a lot of opportunity. There's a lot of buyers still looking for homes. There's homes that are coming on the market. And there are, VA does allow 100% financing, so no down payment for those eligible veterans. And the, traditional, conventional conforming loan does still allow a 3% down payment. So, and that doesn't necessarily have income limitations for first-time home buyers.
I like it.
Yeah. So there we have it. So next time you get that in the mail or the email that says, we can help you with a 1%, don't fall for the tricks. Don't fall for the tricks. Look at what they're saying. Read the fine print. Ask us any questions. And again, it might not be a bad program for the right person, but it doesn't appeal to the masses, right?
Or reach out to us and we'd be happy to show you the numbers.
That's right. Thank you again. Like, share, subscribe to all those things. We'll see you next time.